What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we have a lot going on in the markets. We'll talk about all of it. The first thing we'll start with, of course, is the Bitcoin price chart. We'll talk about the altcoin market, but there's a lot going on over there in the stock market, Forex, commodities. It's a high intensity moment. I think to how intense this exact moment is right now, and it reminds me of just like how intense things were during C19. And it may not seem like that on the charts, but I'll show you why it is to me at this moment. First things first, we could see that, hey, it's looking like Bitcoin may be breaking away from the fractal it's been following nearly 6 months. As we've been talking, is the altcoin market giving some type of signal for that? Did it tell the story ahead of time? There's only 22, 23 days left before this thing wraps up at the top of every Bitcoin bull run. And even in 2018's retracement back to a 702 retracement, that's where we saw the altcoin market move up for another leg. We weren't seeing any signs of the altcoin market ready to do anything yet, leaving a little bit of concern there on the time is ticking, the clock is ticking. But as we can see, Bitcoin has now pulled back, and I would say that is something different than what was going on back then. So we'll give this some more time to play out in here to get a clearer picture of what's going on. But part of me does breathe a sigh of relief to see something like that happening as the time was ticking and the time was running out. We know that in 2018, 2017, the alt seasons last from 25 to 40 days. If we were going to continue following this thing, time was just running out. I think we're at 20 days now at this point until March 24th. If we were going to continue going for something like that, something would have to happen within 24 days or within 20 days, excuse me. So it looks like we potentially have started to deviate. Now, I posted about this over here on Twitter this morning, taking a look at the US dollar currency index, and that we were just ticks away from getting to a 702 Fibonacci retracement here on the DXY, or the US dollar currency index. As we can see now, we have hit it. We have hit the 702 Fibonacci retracement, which historically for many assets can be the retracement rejection level. Obviously, we're in the thick of the moment. I can even put us here on the 1 minute chart to see that we dinged it, have fallen back, and this is what we're doing on the 1 minute right now. So it is right in here. It's now pushing back up towards it again right now. But the big question is, are we going to get rejected at these retracement levels for the DXY? Now, why is the DXY something we even talk about in here? And that's, well, because back in 2017, as the DXY was falling in here, that's where we had an alt season and a cryptocurrency bull run. As the DXY was falling in here, cryptocurrency Bitcoin bull run. So here we are at the 702 Fibonacci retracement. Now, something I would say that is crazy to me, and I probably couldn't have imagined happening, would be that we would see the DXY moving in the upward direction. Let me get some of this off here so it's not so messy. There we go. That we would see the DXY, or the US dollar currency index, moving in the upward direction or gaining strength versus a basket of other currencies at the same time as gold is moving up, and platinum, and silver, and wheat just flying at the same time as the DXY is moving up. So the value of the dollar increasing on the world stage, yet the purchasing power for commodities for the dollar is going down. I just couldn't have imagined that. Your dollars will purchase less wheat, less corn, less gold, less silver, but versus other currencies, it's going up. Crazy. In addition, I couldn't have imagined it getting back to that level. And here we are on the exact same day. Copper is breaking out into a new all-time high the exact same day that the DXY is getting to the 702 Fibonacci retracement. So I mentioned earlier, this is kind of like one of those crazy days, like a C19 style time period, because look at how critical things are. You have the DXY getting back to the 702 retracement. You have copper topped out May 11th. Does that sound familiar? It's when crypto did. Here we go. Moves all the way over. New all-time high gets set today for copper, right when the DXY hits the 702 retracement. Now the question is it going to get rejected right here? It did happen to like pinpoint stop right there on the 1 minute chart that we're looking at. And by the time this video gets exported, we'll probably have an idea of, does this get through or does this fall down? But this is the kind of stuff that happens when like catalysts show up, right? Big, massive events occur at just the right time on charts to, either break things apart or to reject things. And we're right there at that moment right now from a retracement perspective. And we can see the confluence of that by looking at copper breaking out into an all-time high at the same time. And again, I couldn't have imagined that we'd see these things happen at the exact same time, that you'd see the DXY rising at the same time while commodities are moving up like this. But if you notice something, right, this new all-time high that was set by copper got set here within the last 15 minutes, less than 1 hour after the DXY hit the 702 Fibonacci retracement. DXY hits the 702. It took a total of 711 days for that retracement to come back in. 711 days, hits the 702. Copper comes over here, takes 298 days, less than 1 hour after the DXY hits the 702 Fibonacci retracement. Copper breaks out into a new all-time high. That's crazy. And so it's like we're at this pivotal moment right here. I can't imagine it, right, just from a logic perspective, to think that the dollar is going to continue rising and commodities are going to continue rising, that one of these things are going to be getting rejected right here. And either we're going to see the dollar break through these things and these commodities are done, they're not going to keep rising up any higher, or it's the pivotal breakout moment for these commodities and they're about to start flying. And that a lot of these commodities have been quiet for a little while until we finally got back to this moment for the DXY, and that this is now the rejection level. And if this is the rejection level, well, we saw what happened the last times that the DXY was falling. And checking in again on the 1 minute chart here over on the DXY, still pausing out right here, teetering on the edge. And meanwhile, Bitcoin continues to struggle. Again, I know there's going to be people who don't want that. They were like, oh, yeah, I just want to get rid of it and get out of here in just a matter of a couple of weeks. But for my personal picture, I'm looking for, I'm positioned in the altcoin market. For me, it was stressful seeing that there's only 20 something days left until this gets up here. To see a different structure showing up right in here is optimistic for me to say, hey, there's more time being bought. And if this DXY ends up getting rejected in here, well, that's what we saw happen in each of these circumstances, was positive action for the entire crypto market. And so as we sit here right now, one would have to think we're at this huge moment right now where the dollar can get rejected right here, and we're going to see inflation ramp up to the likes of which we've probably never seen, because copper is used in so many things. And like we've been talking about with oil, it is, the lifeblood of the world. And it's this giant moment right now of, is the dollar about to take an absolute nosedive from this retracement level, and these commodities and inflation run absolutely rampant, and crypto follow along doing what it's done each time that the DXY has fallen? Or does the DXY get through here? And if you don't know why 702 Fibonacci retracements can be huge rejection levels, well, there's a reason why it's in the intro of my videos, right? The character, he gets right up to the 702, he gets nervous, breaks out, right? Goes to the moon, right? Because the 702 can be the massive rejection level, and we see it all the time in all different types of assets. We could see it here in Bitcoin as it happened back in May. We're talking there about May 10th, May 11th, right? That's the rejection level, 702 Fibonacci retracement. Even moving back in time and heading back to our previous ABC correction that we had over here for Bitcoin when the market got real scared before we went in our really big bull run, it was also a 702 retracement. We can look over to the very top of the Bitcoin bull run back in 2018 to see that this was a 702 Fibonacci retracement once again right there. And even heading further into the past, we see it happening all the time. That 702 retracement is the rejection level in here before it heads down lower. But it's not just cryptocurrencies that do that. We can even look back to over here for gold, even dating back to the 80s, right? This is before we're doing everything with high-tech computers, right? Somehow, some way, even gold retraces back to a 702 retracement before turning over on itself and collapsing. And I've shown this before, but this is the Dow Jones for the last, 120, 125 years in here. Here's the roaring 20s, and here's the Great Depression over here. But you probably wouldn't have known this, but if we measure the Dow Jones in silver, right? So prior to 1965, so from 1964 and earlier, all of the United States coins were minted in silver. So our money was actually silver. And if we measure the Dow Jones, rather than measuring it in actual dollars, but measuring it in actual silver, we get an entirely different picture of what the Dow Jones has been doing over the course of the last 40 years. And that the major bubble that took place back in the 90s, right? The dot-com bubble. Well, we've done all of this monetary, modern monetary theory, money printing, Federal Reserve, quantitative easing, all of this crazy stuff, right? And so from our perspective, the Dow Jones has been absolutely crushing it, right? But if we actually measured the Dow Jones in our old money before we stopped backing our money up by anything, we can look to see that ever since the dot-com bubble took place and the Dow Jones measured in silver, is that throughout all this time and the big run-up that we're all used to in here has been nothing more than the Dow Jones retracing up to a 702 Fibonacci retracement here when we measure it in our old money in silver rather than debt notes. But our hard money, we can see the Dow has only retraced to a 702 and pinpoint nailed it. So the 702 Fibonacci retracement is highly reactive. We can see how that happens with the Dow Jones measured in silver. We saw how that happened to gold back in the 80s. We've seen how many times that's happened with Bitcoin. It is a very reactionary level. And right now, we just hit it for the DXY. And at the same time, all these commodities are breaking out. And within 1 hour after the DXY hits that 702, copper breaks out into a new all-time high after being stuck ever since May 11th. And so the main focus for me for the rest of the day is going to be watching these charts to see, is copper going to keep breaking out? And after the dollar pinpoint nailed this 702 retracement, are we going to see the dollar fall apart? Because after 711 days, we have finally hit that 702. And if it rejects from here, we've seen what has happened during those circumstances before. And so for Bitcoin, I'm a little bit relieved to see that it's starting to deviate somewhat because that does buy us more time if our structure does change. So this does breathe me a sigh of relief at this point because as we know, the altcoin market also had a 702 Fibonacci retracement pull down. And hopefully we have just bought ourselves a whole lot more time. And that as I'm now reaching near the end of this video, we can see the dollar is still moving its way down after nailing the 702. So whew, what a day. So, all right, guys, that's going to wrap it up for this one. That's going to be the thing I'm going to be watching for the rest of the day. Main focus over there on commodities and over there on the DXY. And like I said earlier in this video, this is the type of stuff you have happen right before like catalysts do. So be keeping an eye on news to come out to confirm things as well. But otherwise, another crazy week, right? It doesn't sound like the crazy is going to stop anytime soon. Geopolitical events obviously heated up overnight. We'll see how the coming weeks, whatever, one day at a time, right? That's what we always say. Let's just take it one day at a time. Otherwise, Bitcoin, maybe it's broken from the fractal. We'll keep an eye on it. I'll update over there on Twitter. Otherwise, I'm going to go ahead and wrap this thing up. I hope that you have a fantastic weekend. Step away from the charts. Enjoy your life. And we'll resume all of this again next week. But all right, guys, that's going to be it. That's going to wrap it up. Thank you so much for watching. If you're looking for something to do throughout the weekend, you can check out my website over here, which is bcbacker.com. It's a course that I put together where I deep dive into the previous Bitcoin bull runs, the previous altcoin market cycles, tying them all together to show how the cryptocurrency market has worked in the past. I talk about my exit plans in here, and I teach you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro. I also do have the most recent market update in here on February 28th, which was just a few days ago. And you can check out all of this educational content over here on bcbacker.com. You can follow me over here on Twitter at bcbacker. And I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.